Okay, first thing I want to show y'all. I don't think y'all read your announcements. In fact, I'm pretty sure you don't. Because you're not the first person to ask me that today. Helpful hint, SLO problem, first entry. The first transaction you will be posting is the owner's investment into the business. Normally, we would only see the owner investing cash. That's what we've done in the past. All they had was cash, capital. And the problems we worked. In the transaction, in this transaction on your SLO problem, the owner is contributing other assets along with cash. So you'll have like some accounts receivable, you'll have some office equipment. And so you will debit the account for each item contributed. In other words, debit cash, debit equipment, debit accounts receivable. And then the credit to the owner's capital account will be for the total of all those other things. So it's just one entry, but you're going to have several debits, one credit for the total of all those things. Does that make sense? Okay. Okay, also, I went ahead and just kind of went over that you've been assigned this part of the problem. Due date is Wednesday. However, you can turn it in early and probably should. It's not going to take you long. It should take 30, 45 minutes max. And the sooner you get it in, the sooner you can start on the next part. Because, I mean, essentially, you can finish it early if you want to. I don't care. You're not required to turn it in at the latest due date. But no exceptions. The whole thing is due Friday before you leave for Thanksgiving. I want the original. I don't want email saying, oops, I forgot to turn it in. Here's some pictures of it. I want the original turned in on paper. I don't want pictures. If you don't get it in by Friday the 20th, the parts that are incomplete, you'll get a 0. I want it turned in. Don't forget. I'll try to remember to remind you, but I don't think y'all read these, so I don't know. Y'all got to read the announcements, please. Do you have notifications set?
No, but I saw that one. I didn't see the other one.
Okay. See, that's the danger of putting out more than one on a day. Yeah.
I feel like we already covered this, but is this like a test grade?
Yes, it is a test grade. There's different points assigned for each part, but I want to say I've got all the parts already out there in your due dates with the points on them.
So the last test was already the last test.
Not necessarily.
So you have another one?
Probably. You look excited. Yeah, because the exam is comprehensive. Now, if I feel like it's possible that I may just include the final chapters on the final instead of having another chapter test, just because of time constraints, because we're not coming back. And it may be that final chapter test is online. I don't like taking a break between covering material. I'd rather, in other words, I'd rather cover material, have a test, then y'all have a break. I don't want to cover some material, y'all have a week of a break, come back, cover some more, and then test you. I prefer you test before you leave because you tend to flush it.
So like we could take one before Thanksgiving and then just don't have another test. Like online.
Probably. But your final will be one.
Your system work. I can't even get my system up.
Yeah. I'm in it. I don't think so. Did you not get one? I can get you another one, but I pretty much just put what we needed. I don't have my computer in here. It's chapter 8, isn't it? Yeah, you're one of those that didn't get one. Okay. Do me a favor. You know where my office is? No? Okay. Y'all sit tight a second. All right. Sorry. Yeah, I think you took that test on the first day, didn't you? Yep. I think you too. I didn't give. You didn't get one either, did you? All right. Sorry, guys. Okay. So in the meantime, any other questions on anything? I didn't get your test graded. I got the multiple choice part run through the machine, but I'll try to get those graded as quick as I can. I know y'all want to see what you made. Let's load it. Okay, hold on. Mr. Clark's having trouble. Okay, let's see. I can't tell y'all that this next part may not be a little bit boring. I'm gonna try to help make it not as boring as it's probably gonna be, but unfortunately that's kind of the nature of some of this stuff, but it's important. And it's important, again, like for you, if you ever have a business of your own, you kind of need to have an idea of measures to take to keep your business safe from theft, mistakes, and that sort of thing. So all of the things we go over have a purpose. It just you may not see it right now. It's all around. Okay. I wanted to. I hate using PowerPoints, but we'll kind of go back and forth. I'm not a big PowerPoint fan because I think they put y'all to sleep. Okay. We can punch holes and staple after this class. Sorry about that. Okay. All right. So this next chapter is on internal controls. And what that means is that's like measures that are put in place to keep your assets safe. And this has always been something that businesses have been encouraged to do by their auditors. Whoops, that's not right. That changed me to the next chapter. Okay, so when y'all hear, there's two different kinds of auditors generally. There's auditors that work for the government. Like if you have an IRS audit, that ain't good. That's painful. But a lot of companies will have a financial statement audit done by like an outside accounting firm because maybe they have loans or something, and the bank is always going to want somebody else to come in, look and make sure everything's recorded in the right place and prepare financial statements, because then they make a statement on it and say, hey, based on our examination, we believe these numbers are fair, and they're an objective party. So it adds more weight to the business's financials. Regardless of whether they're auditors that the company hired or if it was an IRS auditor, when people hear the word auditor, they think nasty. And it's funny because I actually assisted, I did more tax work than audit, but way much more tax work. I never did like auditing, but it's funny the people, how they react to you, the employees, when you're over there doing an audit, and all you're doing is trying to make sure everything's in the right place, essentially. But they think you're over there out to get them and find them stealing and stuff like that. So they're all kind of defensive and quiet. And I would always tell them, hey, we work for y'all. I'm not the enemy. You know, it's okay. You don't have to be ugly. But auditors of financial statements, you know, they'll come in, and if they see that something's like maybe the way a company does things has got them wide open for fraud or for employees to steal or something like that, they'll make recommendations of things that the company needs to do to kind of tighten that up so that they don't get stolen blind. So that's what internal controls are all about. Okay, so the first thing that we are going to talk about, and I can't remember if you say this Sarbanes-Oxley or Sarbanes-Oxley. But anyway, these were two guys that were senators or they were legislators, and they came up with this act. They wrote this act. And what this came out of, you know, we talked in the beginning of this class about WorldCom and some of those big frauds that took place, that people lost everything they had and things like that. As a result of several of those happening right around the same time, this act was passed because it got to where stockholders were scared, you know, they were going to lose all their investment. So this act was put in place to help these investors feel better. So this is one of the most important acts. Well, we're not going to behave this morning. I guess he gave me his ailment. What is going on? I've got something set on here. Strange. It's Monday. I'm telling y'all. What in the world is it? It's got this thing like it looks like a slingshot. Okay, anyway, this act is one of the most important laws affecting U.S. companies in recent history. This put a lot of regulations in place that. Is that what it's doing? I don't want that. Oh my gosh. It's still on. It's going to be one of those days. Huh? How do I get it off of that? How do I get it? I mean, oh my gosh. It's not going, this is not good. This is not a good way to start the day. Is it off now? It just won't write. It's like doing weird stuff. Seriously? What's it doing? Y'all know? I mean, I think it's usually on draw. What in the heck? It's just not gonna, it's doing something. It's doing some weird command. Okay, anyway. This is one of the most important laws affecting U.S. companies in recent history. Okay, so the whole purpose of it was to, you gotta love these words, foster. They were trying to build up public confidence and trust in financial reporting. Because companies that are traded on a stock exchange, those are publicly traded companies. And stockholders have access to those financial statements. They can, you know, any one of y'all that if you got some money and you want to invest it, you could go out and research, and companies that are publicly traded, you can look at their financial statements. You can look at all kinds of stuff on them. It's out there for you to review and do your research before you invest money. So the purpose of this act, part of it was to foster public confidence in this financial reporting. All right, and it was also designed to prevent fraud and theft and financial scandals. Okay, I don't know. This is the strangest thing ever. Huh? This? No. I don't know. It's doing something weird. This one? Oh, beside the eraser? How much time we waste on strange things like this. Well, it's still doing it. It's like this slingshot looking thing. I wonder if it's this particular file. I don't know. I did everything like I always do. Help! Am I supposed to be on that? No. Y'all see what it's doing? It's really weird. It's not ink to shape, is it? I just want you to write. That's what it's acting like. These are the days when I just want to say, forget it, let's go home. I know y'all would just hate that. All right, so that should be companies foster public confidence designed to prevent fraud, theft, and financial scandals. Okay, applies only to companies whose stock is traded on public exchanges. So it's publicly traded companies, publicly held companies. This act highlighted the importance of assessing financial controls, internal controls. It said we need to check these, make sure they're tight in a company so there's no open doors, there's no room for somebody to steal or to defraud. And reporting, so it highlighted those controls and financial reporting. Because what happened with WorldCom, there wasn't really any money stolen that I know of. What happened was there was problems with the financial statements. The industry that they were in, it had been booming. I mean, the company was just going crazy. People were investing like crazy. It was growing. I mean, stock prices were great, high. You know, everybody that was invested in it just was doing great, you know. And the thing is, the market kind of, I won't say it's a faddish kind of thing, but it was technology, and technology was developing. So it was a way of, y'all would have no, y'all don't know the kind of crap we used to go through to make a long distance phone call. Used to be, you know, we had our landline at the house. Y'all seen landlines, right? I'm not making fun of you. Things have changed so much, and I'll say things sometimes, and y'all look at me like I've got two heads. Everybody's house, we had a landline, and if you wanted, it depended on what plan you were on with. It was Bell South back then, not AT&T. It might be that I live in Brandon, and to call Clinton, where my parents live, was long distance. You know, so it was crazy. So you could, you know, get some kind of plan. They charge you a certain amount per minute, or you could get with these like independent long distance companies. You have what's called a calling card, and you could dial this number in and make your long distance call through that account. Well, that's kind of what WorldCom was doing. They had this long distance service that you would subscribe to, and their per minute rates were cheaper and all that kind of stuff. Well, obviously technology and everything evolved, and it got to a point where that industry started to decline because other things were taking its place. So, you know, for one particular quarter, they had projected great earnings, things are going to look good. And when they got the financial statements, they weren't. They had a loss for that quarter, and that's not what they were expecting. So it kind of freaked them out a little bit, and they thought, well, something must be wrong somewhere. They dug and dug, couldn't find it anywhere. And they said, you know what, let's just make an adjustment through depreciation, and we'll find it next quarter. It'll surface. Well, it didn't. It was the same situation again. And after about 2 or 3 quarters, this just kept snowballing. And ultimately, they were called out on it because it's fraud. You're making an entry to make the books look better, the financial statements look better, so that your stockholders think things are fantastic when they're not. So you're misleading your stockholders. And then the company eventually had to declare bankruptcy. So if anybody had stock in that company, they lost whatever they put into their stock. So it was really bad. And so that's the reason, that's one of the reasons, you know, that all these rules and stuff are in place now, because of things like that, you know. And again, no money stolen, but it was fraud. So, all right, publicly held companies. All right, emphasize the importance of effective internal controls. So, what are internal controls? Those are procedures and processes used by a company to safeguard the assets, process the information accurately, and ensure compliance with laws. So that's what internal controls are. The biggest thing I would say are the first two, that you got to have the compliance with the laws, but the day-to-day stuff too is make sure you've got processes in place that protect your stuff. All right, so this you'll see this act called SOX. So that's what that means. All right, so recording of transactions, preparing of financial statements. That's where they are, stressed to have internal controls in place over those. All right, so this act required companies and their independent accountants to report on the effectiveness of the company's internal controls. And we're going to talk about some examples of internal controls so you'll know what the heck I'm talking about. And there are certain reports that they have to provide to the Securities Exchange Commission and their stockholders so that they can all see this. All right, let's switch gears. All right. Same stuff. Okay. So before the Sarbanes-Oxley Act was passed, internal controls weren't really, I guess they weren't really emphasized as much. Fraud and theft was pretty rampant, and the investors and stockholders were kind of paying the price for it. So now, since this act has been passed, it has greatly diminished the occurrence of fraud and theft, financial theft. I mean, people get pretty creative stealing stuff. It's interesting, especially if they're an accountant. Yeah, I told y'all my grandfather's credit manager. We had that situation where we had some theft going on. He had a really creative way of stealing money. We don't even know how much he got. All I know is what I could find in the first 2 years. I was like, the way the reports were printed, you couldn't tell. I got enough information to come up with about 250 grand within a 2-year period, and he was there for a long time. So, I don't know how much he got, but he was very creative. So accounts receivable, we had customers. Sometimes, there'd be a time lag, like, okay, we've done those entries where a credit was issued to a customer after they paid, right? So their accounts receivable would have had a credit balance, which is supposed to have a debit, but it had a credit. But they could charge against it, and not have to pay anymore, up to the point they had that credit. Well, any of our customers who had credits on their account, if it sat there for a certain period of time and he determined they probably weren't going to claim it, the right thing to do is, if it sits there for a little while, you issue the customer a check. Have y'all ever had a credit on something and they sent you a check for it? Like a credit card maybe, or you probably will one day. I've had stuff like, maybe I paid my credit card bill and then I returned something, and it was like a belt card or something I didn't use very often. And then after, they have a certain number of days, if you don't charge something against it, they'll send you a check back for your credit balance where you overpaid. And that's what we should have done. But instead, he would watch it, and after a certain amount of time, he would move that credit from that customer's account and make it zero, and he'd move it to another accounts receivable account called employee use only. And so, anyway, he would, he would frequently go and get $5 out of our cash drawer for lunch or something, but he would write it on the report, that he got it, so it would go on his account as money he owed. But, every so often, he would pay his account off with these credits that had accumulated that belonged to customers. He'd pay his own stuff off, so it wasn't his money. It wasn't. He bought a truck with it. He did all kinds of stuff. Yeah. He was bold. I'm trying to think. He did all kinds of stuff like that. He borrowed money and he would pay it back with those credits. So he wasn't paying it back. He was just moving numbers around. He's essentially stealing from customers. But yeah, people get creative, especially when they have some authority and they have access to recording entries on the books. So it can get they can get kind of sneaky about it. All right, so there is a management annual report on internal control that is supposed to go out on these public companies, and it's management's evaluation of how good their internal control system is. So you may see that again. All right, so objectives of internal control: safeguarding your assets, making sure you're reporting information that's good, and complying with the laws. All right, so employee fraud, what that is, it's not when you make a mistake. It's not when you transpose numbers or maybe you record 10,000 instead of 1,000. That's a mistake if you didn't do it on purpose. What fraud is an intentional act of deceiving an employer for your own gain. So that's what makes it fraud. It's intentional and you're doing it for your own personal gain. Not good. So that's what was happening in our case. And it's funny, when you're an auditor, you kind of, in some of your training, you learn what the profile is of a person who does that kind of thing. And it was funny. I just kind of, and I wasn't even an auditor. That's what was so funny about it. Everybody at the place was upset, and I can't believe it. And I was like, y'all, arrogant, access to the records, access to cash, in a position of authority. I mean, he just like, check, 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 check. I just checked off the list. It's like, he's like, check, 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 check. I wasn't surprised. I was mad, but I wasn't surprised. And I called him like within 2 months. So it's kind of like, anybody been looking at stuff? And it may be that somebody did. They just didn't feel comfortable coming out with it. I don't know. All right. So there are 3 internal control objectives achieved by applying the 5 elements of internal control. I know this is boring, y'all. How can we make this more interesting? I can tell y'all more stories about fraud. That's interesting to me. Do y'all not find that interesting? It's interesting to me what people, I just don't think that way. You know, I couldn't sleep at night. I would be sweating profusely at work. You know, I mean, it would just be, because I'm, you know, I live on my face. So whatever I'm thinking is all over my face. We had several clients that had bookkeepers just write themselves checks, and the owners weren't catching it. So it's things like this, okay? Even if you have a small business, and maybe you have a person who's like your receptionist / bookkeeper, and she pays your bills for you and all that sort of thing, you don't want to let this person write the checks and sign them, because they just do whatever they want to. You don't want to leave this person with blank checks with a signature on them, because then they can write it to whatever they want to. And these things happen. People do this stuff. They're older folks sometimes they're not. But this person gains their trust, and so they think they're not going to do that. You know, and if I'm not here and they need to pay a bill, maybe they get a COD delivery or something like that where you have to pay on the spot, they're going to need a check. So I'll just go ahead and leave some signed checks. That's just opening the door to, well, what do you want today, you know? And what compounded the problem at this one place was that the owner was not, when the bank statements would come, he was not looking at them, because they have the canceled check copies on there, and he could look through there and see, did he sign every one of those checks? Had he seen all of them, or was something weird in there? And he just didn't do it. And he could have caught it. I don't remember how much she got, about $75,000, I think. It's a real small business, you know. She bought herself a car. It's not about cars and trucks. I know, it's blatant. And the dude at our place, he bought a truck with his. And I didn't catch that for a few more months because I saw where the transaction had taken place, but I couldn't tell whether he paid it back because, like I said, some of the records were, you couldn't get the detail like you could in the most recent years. It was a huge system and it would only hold a certain amount of information. They didn't have printed copies of the detail. But what happened was the receipt, the bill for his tag came. And we had a fleet of trucks of all different kinds. And we had some Ford F-150s that were, service trucks and delivery trucks and all that. So, but they were all white. And so all of our trucks were white because they had our logo on it that, wouldn't show up on anything else. So I had a spreadsheet with all the VIN numbers of all the vehicles in it so that when something came up for renewal, I could keep up with it. And I could not find this truck. So I finally, the light bulb went off and I called the tax office and I said, can you tell me what color this vehicle is? She said black. I was like, oh. So I knew then because he had a black F-150. And so we had a mechanic shop. And that dude was kind of, not terribly intimidating, but not a small man and not scared. So I said, Perry, go get my truck. I said, you get my truck, it'll be your shop truck. And he went and got my truck, and the guy actually had the nerve to say, well, I've been paying for the insurance on it. Well, thank you so much. Thank you so much on this truck we bought for you. You should be paying for more than that. It's crazy. The conies some people have, it's like, seriously? But they get away with a little bit and then they get comfortable with it. And so they try a little more, and it just gets out of control. There are different things that come into place. There's kind of like a hierarchy of controls. Okay, so we talked about one thing for you to remember too on this thing right here. The 3 objectives of internal control to provide reasonable assurance. That's something you'll hear a lot in auditing. Reasonable assurance. It's not absolute assurance. It's reasonable. They're not going to say absolute because then that opens you up to be sued. There is no way to provide absolute assurance that nobody's going to be able to steal from you. There's always somebody a little bit smarter. But it provides reasonable assurance. So you're making every effort to, shut those doors and seal up those cracks. So the objectives are to make sure your assets are safeguarded and used for business purposes. Like we had people who would, our manager, you know how long it's been? It's been 17 years since we sold that company, and I still have a burn in my britches. Like, yes, just the audacity of people, it just kills me. And it was my grandparents, so it just made it even worse. But they allowed some of it to happen. So what can you say? The manager, when we sold the business, we sold the assets. So that was any equipment, trucks, anything we had. Well, we started going through with the buyer, the list of assets and going out and saying, okay, here's this one, here's that one, identifying them, putting our hands on them. Couldn't find this one piece of equipment. I think it was a bulldozer or a track hoe or something big. And our general manager had it out on his personal property, working on his property. So that would be the prime example of making sure your assets are safeguarded and used for business purposes. He was using that for personal purposes and he didn't even own it. All right, so safeguarding means you're keeping it safe from theft, misuse, misplacement. So that would be a case of misuse. And we might have thought it was misplaced for a while, but then we figured out what it was. All right, so you're trying to prevent employee fraud. And remember, employee fraud is intentional deceiving of an employer for personal gain. I mean, it can range from small to huge. And it says range from minor overstating of travel expense. Okay, so let's say you go on a business trip and you turn your expenses in to be reimbursed because it's something the company's going to pay you back for. Let's say you get paid mileage because you took your own car. And instead of saying, I went 250 miles, which would be the actual distance of your trip, you say it was 300. So you fudged a little bit to get a little extra mileage on your check. That's fraud. That's stealing. It's lying. I mean, some people think, oh, it's not that much. If it's not accurate and you're doing it on purpose, you've committed fraud. So be careful about that, because I know some people kind of get complacent and think, oh, it's not going to hurt anybody. It's just a little bit. It's fraud. It's a crime. So be careful. Make sure you're and cover yourself, because even if you make a mistake, you didn't do it on purpose. You're going to have to prove that if they come back and say this isn't right. So just make sure you are behaving with integrity. I'll just say that. Sometimes it's fudging the accounting records to hide the fraud, like the accounting use only thing. Because he was making a journal entry, he's moving it. Anyway, business information needs to be accurate. All right. And I mean, do you think employee fraud is going to affect the accuracy of the records? Of course it is. If you're reporting 300 miles of travel and you only drove 250, you've got a little extra in there for travel expense that wasn't real. It's not accurate. So you start, and that's small, but you start mushrooming these things. And for instance, let's see, how can okay, so there was this person I knew about. I didn't work with him. They didn't work for us, but he worked for an agency, and they were issued a credit card by the agency to use for gas, because they drove an agency vehicle, so like gas and maintenance and that kind of thing. And I'm not sure what else. If they went on a trip, a agency trip, to use it for any expenses and stuff like that. Well, this person went out and bought like furniture for their house and all kinds of stuff. And they got caught and they had to pay it back. Why they weren't locked up, I'm not sure, because they are still out and about working for an agency. So, government agency. So anyway, that's fraud. You're using your company credit card for personal stuff. I called out, I had a client that I was working with, and their manager, they hired this guy, and he's one of those who walks in and thinks he's all cool in his expensive suits and stuff. And I called him out because I could see credit card charges on there that it was fishy. It was constant. He's buying his kids' school clothes and all kinds of stuff and charging them with a business credit card. And I tried to tell them all, y'all, this, and nobody would do anything about it. And we got fired as a client, as an accountant from them because I brought it out. But what am I going to do if it comes out and they say, well, why didn't you say something? I did, cover yourself. But ultimately, and I got chastised by my boss about that, so that's why I'm not there anymore. So I'm not going to allow fraud to continue to occur under my nose and not say anything about it. I mean, it was blatant and it was a lot. But, I can live with myself and I can sleep at night. So, all right. And then making sure employees and everybody complies with the laws. You've got OSHA and all that kind of stuff. You've got to make sure there's safety things in place. If you don't comply with those laws, they can shut you down as a business. If you've got dangerous conditions, or you're not making your employees wear hard hats in the warehouse, or, whatever, there's a federal government agency, they'll shut you down. So is that going to affect your business? Yeah. If you can't operate, it will. Okay. So there's other things in here about the control environment and so on. Monitoring, risk assessment, procedures. All right, some of the control procedures. So again, they say provide reasonable assurance. And this is where I am. Hang on, I'll look back at this real quick. It's always reasonable assurance. That's called covering your butt. That's accountants covering your butts. So things that strengthen your internal control, make sure you have competent personnel. Make sure you have people working for you that know what the heck they're doing. Another way is to rotate the duties. Okay, so this week you answer the phone and open the mail. And Ayana, she's going to record the cash receipts in the books and take payments from customers and so on. You know, y'all are doing different things. Well, next week or next month, y'all are going to shift. And you're going to do that. And maybe she's going to do somebody else's job, or she may do your job, but you shift. That way, not the same person's not always doing the same job. It's easier to catch someone and harder to perpetrate, something shady. Also, making people take vacations, mandatory vacations, because it's the same concept. If somebody that works for you never goes on vacation and they handle the accounting or the money, you need to make them go on a vacation, because then somebody else has to do their job while they're gone and can get in there and see if everything's like it's supposed to be. But you will see people who are embezzling, not wanting to take a vacation. They just want to get paid for it. They don't want to take off. And you literally have to force them to take their vacation. You need these people that handle money and things like that. They need to go on vacation. So you have a chance to see, is everything kosher in there? Separate responsibilities, like I was talking about with you two. You don't want the same person who opens the mail and gets the checks from customers to record those checks. Somebody else needs to record it, because that keeps things safe. It's separating the duties. You don't want the person who writes the checks to sign the checks unless they're the owner. You know what a bank reconciliation is? Y'all ever done one? No? Okay, that's where you take your checking account and you take the statement from the bank that comes out once a month, and you compare them, and you make sure that you have accounted for everything they have on going through there, and that they haven't made a mistake or you haven't made a mistake. You're just making a match, essentially. So the same person who writes the checks does not need to do that. There have been people who have changed the bank statement. Once, because it used to be we would get the canceled checks back, like the physical checks back. We don't get that anymore. You'll get a copy. Or you can actually look up, and that's safer to look at them on the computer. You can't change them. But it used to be that, they change, like who it was written to or something like that. We've had people we call them shell LLCs, because there's nothing there but a shell. They set up a business and they'll generate some kind of invoice and pay it, and it's their business. And they're not doing anything for it. They're embezzling. They get kind of creative and crafty with it. You'd be surprised. I've been surprised. It never ceases to amaze me, though, the lengths people will go to steal. Okay. Now, internal controls aren't going to fix everything, but it's going to help. You've got human involvement, and we make mistakes. So being tired, looking at something wrong, misjudging, it's not going to be a guarantee that you're not going to get stolen from. But it is security, or at least you're moving in the right direction. It's not like wearing your seatbelt. You don't know that you're not going to get in a wreck, but by putting on your seatbelt, at least you're taking precautions. So that's kind of what internal controls are similar to. You're taking precautions, you're putting things in place to keep your stuff safe, but it's not a guarantee, but you got to do it. Okay. So I think that will get us for today. Y'all just make sure go ahead and make sure you do this reading guide, which you should have already done by today because we had that reading quiz. So what I'll do is put the completed one out there so you can see it if you want to print it with the answers in it. Because like I said, I think for this chapter, what I'm going to do is, the next thing we'll do next class period is a bank reconciliation. So you can kind of see how it works, because that is a huge internal control. It's just an example of one that's very important because cash is like wide open with that. So I'm just thinking I'm not going to include a whole bunch from this chapter and we're going to move on to something else. So that's the plan. But I'll put the completed one out there for y'all so you can see what your answers are supposed to be. And I will not see y'all Wednesday, but I will have you another entertaining video for Wednesday. This will pass. I know it's boring. It's all boring. I think y'all are all worn out. It's not long now, though.